Hey everyone, I just wanted to make a quick video breaking down the PANW trade that Invest Answers recently posted about on Patreon. Most of his posts I try to analyze and make sure that I understand why he's doing it. So I kind of just want to go through the process of how I do research on that, how I look at it, and try and figure out why James made that trade. So of course, this isn't financial advice. This is just how I understand it, and I did see a lot of comments on his post today. Just things like, I wish I knew about options and I need to learn this stuff and whatever. And so that seems to happen on every single one of his trade alerts. So thought that maybe this could be helpful for some people. And quick note as well, some of the numbers do seem to be off a little bit. And I reached out to James on Discord just to see if there was a discrepancy somewhere, and it looks like there was mistakes somewhere, but that doesn't really matter because the point is he's up 300% in about 6 months, less than 6 months. Yeah, about 6 months. So either way, it's a good trade and the principle is still the same. So wanted to go over that and see if that would be helpful. Okay, so first things first, this isn't like an options 101, but did want to throw this in for any beginners or someone that doesn't know what's going on. Essentially, there are two types of options. There's a call and a put, and you can buy or sell either one. So you can see here, you can buy a call or you can sell a call, or you can buy a put or sell a put. Okay, so if you think the stock price is going to go up, you can buy a call or you can sell a put. And then if you think the price is going to go down, you can sell a call or buy a put. And the synthetic long strategy combines these two. And so it's kind of like a double bullish setup, and you need a lot of margin to do it. You need to know what you're doing. And if it goes the wrong direction, you can really get smoked. So be really careful when you're doing these, and definitely start with maybe cheaper stocks so you don't blow your account. Okay, so that's the main thing here is a synthetic long combines both a call and a put. The next thing that the first thing that I did was go to Patreon, and there's a really handy search feature that I use. And so I wanted to go back and see when the original post was made, the original trade. So I can just type in PANW in the search, and I scroll down to the original trade. And for convenience sake, I screenshotted everything, but you can see it happened on February, right here, February 26th. And Nancy Pelosi, she bought calls as well. That's why this trade happened. And she had a strike of 200 and an expiration date of 1/17/2025. So she just had straight up calls. It wasn't a combo or anything like what James did. So moving back to here, I'm gonna zoom in here, and I screenshotted all of the posts for convenience here. And so let's start and break it down here. So I entered a synthetic long on PANW at 300 strike. At debit, $18. Break even is 318, entry at 305. And then again, he says high risk trade because we don't know what's going on. But so the next thing that I did was I opened up Option Strat. And Option Strat helps you visualize. This is what really taught me options, is messing around with this for hours and trying to figure out what the heck these contracts do. So let's build this together and see if we can get close to what James had. So I go to build long synthetic future, and then I need to change the ticker here to PANW, Palo Alto Networks. Okay, so looking back here, I entered a synthetic long at 300 strike. So let's drag these down to 300, both of them, because again, this is the call and this is the put side. Let's change the date to January 25. Okay, and so if you were to buy this today, right now, this would cost you $7,300 or 72 bucks. The net debit was $18. And so this obviously happened back in February. So what we can do is hide the put side, because I want to figure out how much the call costed originally. So I can open up this historical chart up here, and I can zoom in back to 226 when it originally happened. So you can see the price shot up like crazy there. So we'll just have to guesstimate, and let's just say the call was $50. So we can click on this. $50 goes here. Okay, net debit of 5,000 or 50 times 100. Let's include the put again. And so again, the put price is today's price. So let's get it close. So if the put at the time was $32, which it probably was really close to that, we now get our net debit of $1,800. Okay. So coming back here, that gives us our net debit of $18. 18 times 100 is 1,800. Okay. And then break even is 318. We can see here that the break even is 318. So for me, this is close enough. The contract prices are probably not exact, but again, that is beside the point. Okay, so that's what you would have done. If you would have followed the trade exactly, this is what you would have gotten. You'd be up 300%, just like the post mentioned. Great. Okay, so let's now break down the next posts. Okay, high risk. Okay, we don't really care. Here, he's Invest Answers is talking about I may hedge, already thinking about it because we can see on the chart that it has gone up crazy. So getting ready to take profits, getting ready to protect his position for the turn down, right? Nothing goes up in a straight line. Earnings was good. And then we had an earnings gap, which brought the price up to something like 370 or something like that. Okay, so this is the post from today. And this is what I really had to dig into and trying to figure out on my own because I've never really hedged before. But let's see if we can make sense of this. Just sold the December 400 calls against the original position. I hedged at 369. I got 1980, 1985 for them. Roll up at 420 if we go that high. And then, okay, great. So he's already done a 3x, 300%. Great. So let's go back into option strat. Let's open a new tab. Okay. So what's cool about this is if I reset this, I can right click and remove. And if I right click on the chart, I can sell a call. Okay. So he sold a $400 call. Expiration of December. Okay. 1850 is what he said he got for it. So let's look at this now. Break even is below $418. Well, that makes a whole lot of sense that if we get to 420, he'll roll up, meaning he'll close this position and he'll open another one. And as long as we're below that price, you make money. Okay. So that's why he sold the $400 call, because if we take a dump to the downside, let's open up Trading View. Here's Palo Alto. We can already see today that it's down 2%, not huge. But, if we get a retracement back down, let's just say a 10% down to 330, we can line it up here. 330, 328 is good enough. And this essentially, if you remember from the first trade, we paid $1,800 to open it. Well, we got a credit of $1,850. So that covers your cost basis right there. And any extra money he made is pure profit. So selling this call protected his downside. If we take a massive dump to the downside, well, he makes money on that as well. Now you might ask, why didn't he close the position altogether? Well, maybe there's further upside. So if there's further upside, then that's, you're still in the trade because there's still 4 months for this to pan out. If we rip up to $400, which is only $40 away, you still get to keep about 10 grand of profit. And then again, this is per contract. So anyways, this is what I spent my morning doing, trying to figure out why he did it, and it makes a lot of sense. Again, coming back to the chart, sell flag maybe coming on, not yet on the daily 4-hour false sell, but starting to look toppy here, and we can see it starting to roll. Anyways, I hope that was helpful. This is what I try and do on every one of his trade alerts. And if you start doing this, you'll start understanding the reasoning behind it all, and you'll be able to take advantage of the money that options can generate for you. So again, big shout out to James, all that he does for us. And if you have any questions, drop them in the comments or send me an email, Discord, whatever. So anyways, thanks.